After a wild week in the markets, let's talk about tariffs and where I think the market is going on the weekly update. Okay, friends, let's talk about the post-tariff market. Here's what you need to know. First up, we have now completed the entire calendar of rough news events that I was braced for. So about maybe 3 weeks ago, I shared with you this calendar of important dates. I guess it was more than that, maybe 4 weeks ago now. And I said, hey, we're going to have some pretty rough sledding during this time because March 21st is options expiry. April 2nd was Reciprocal Tariff Day, aka Liberation Day. April 10th was Chinese Retaliatory Tariff Day, and April 15th was Tax Day, Liquidity Day. And I said all of these things, not any one of them is good. In fact, many of these are bad and pretty challenging to market structure. We've now reached the other side of all of these, so these are gone, and thank God for that. So what we're going to do today is we're going to look at where I think things are going to go from here. So first, let's start off with the market. And by the way, I thought we'd have some rough sledding. I didn't anticipate anything like as rough as it got. Here's the S&P 500 in green and red candles. Orange is the 50-day, purple is the 200-day. Here's where we were preparing for Liberation Day. Then Liberation Day happened. We basically experienced something like the crash of 1987 in about 3 trading sessions. And then since then, there's been about, I guess that's a little over a 10% snapback that started to occur the moment that Trump started to walk back his tariffs and Liberation Day and all the rest of that. The moment he started backpedaling is the moment that the market started going higher. So where we are today right now, well, we're lower than where we were in this, holding on to the 200-day moving average zone. And I think from here, it's going to be tough for the market to make continued forward progress until we get some resolution to some of the things that are in the air. So what I wanted to do today was just kind of share with you the way I'm looking at things and give you kind of my decision-making rubric. So there's going to be a lot of news events over the next couple weeks and certainly over the next 90 days. And we need to appraise them as good or bad. And so here's what I'm going to be looking at. We're going to see which one of these factors is going to be enough to tip the scales. Let's talk on the positive side first. Well, here's what I expect over the next 90 days. I think trade deals should continue to get done and be announced. And so I think, we're probably at the bottom or as bad as it's going to get on the trade side. That was pretty much Liberation Day when Trump sort of put the economy and markets into meltdown. That's about as bad as it's going to get. So that should improve from here. Company earnings, we are in earnings season. And if you'll remember, one of the things that I said, we had all these news events to get through, and then I expected the back half of April to be much better. And one of the reasons why I thought April would be much better is because we're going to be in earnings season and earnings should be fine. We've had a little bit of earnings now, just a smattering, mainly banks, a couple materials and some airlines. They've all been great. Not only was the first quarter positive, but even guidance going forward was pretty good as well. So earnings have been strong and the guides have been surprisingly strong. United Airlines said, we'd be upping our guidance if it wasn't for this tariff thing. So that's pretty good. That's really positive. Also on the positive side, CPI and PPI, that's inflation that we're talking about here, has been ice cold. And potentially what that's going to do is that's going to pull the Fed in play. So the Fed is not here to just, damage the economy, keep rates high, and take away the punch bowl. The Fed is here, if we've got price stability, then they have tremendous room to start cutting rates because rates are kind of right now still floating in a restrictive area. This is one of the biggest impacts, I think, for 2025, and CPI and PPI, up to the point of the tariffs, have been really accommodative for this. So this looks pretty good. Then finally, what I will say is I'm not expecting too much from this trade war. I think it's going to go exactly the same as the 2018 trade war. So, I'm not really panicking, and I don't think the world is ending. But what I will say is even if these tariffs and this trade war ends up in the adverse scenario, businesses are really good at adapting. CNBC has been running the headline, 1 out of every 5 iPhones is made in India right now. So even if we go and we have the battle with China and there's no resolution there, businesses have options. They're just going to ramp up production in India, and maybe that might even be for the better. So the positive side, I think this is pretty stacked here. Let's look on the negative side. Negative side, 90 days isn't a lot of time for comprehensive economic policy. What does that mean? That means we're going to have another uncertainty period. Maybe the can is going to need to get kicked for another 90 days. It's just not great. And what we're talking about here are very comprehensive things. This is not just tariffs. That was Trump's mistake. He said we're going to do, reciprocal tariffs, and then what he unveiled was something much more holistic than that. I don't know if you can get that done in 90 days. I mean, we're talking about bigger things here. I will say that the administration seems arbitrary to an outsider, and I'm just going to put that there. I got plenty of notes in my inbox about, what I was saying about what Mr. Trump was doing around Liberation Day. So I'm just going to leave that one there. Chinese reprisals could directly impact large businesses, and here I'm thinking about Starbucks, Apple, Nike, Boeing. China has some room to fight, and they have room to hurt us, and these large businesses, that hurts us like directly in the market, directly in the S&P 500. So there's some pain points there. So what I hope is cooler heads will prevail, and that's what I'm expecting, but we want to be aware of the danger of reprisals. And then finally, this, even though CPI and PPI are ice cold, this tariff inflation shock, should we get one, will sideline the Fed. So the Fed's going to wait for data one way or another. They seemed okay to sort of jump the gun in 2024 prior to the election. Post-election, they seem to want to wait for data points. Kind of interesting there. But anyway, that's definitely a negative. So what does it all mean in the post-tariff market? Well, with the passing of tax day, our entire news calendar has been cleared. And so I don't think there's any more news events. And what I expect to have happen from here, I expect earnings to sort of tell us where we're going to go from here. Markets are off the low, but a lot of damage has been done. So I really see us in this moment in time sort of at a crossroads. The trade war brings with it opportunities as well as challenges. Opportunities are mainly on the economic side, not really on the stock market side. The challenges, I think, are all on the stock market side. So the trade war, the trade wars are never good for stocks. And so it's not good for stocks. It's not going to be great for the stock market, even when all these things get resolved. But resolve it we will, and we will get to the other side of this. I think earnings and guidance will be the swing factor in where the market goes next, and I'm cautiously optimistic on the outlook for all of it. The early data that we have seen says, hey, we're not going off the cliff here yet. And what the banks told us, they said, hey, even looking forward post-tariff, I don't see a whole lot of people, changing their spending habits. Nothing has changed because of Liberation Day. And so I find myself cautiously optimistic at this moment in time. I'll see you this weekend for the markets review, and we'll take another look. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.